Hi, my name is Mark Shelley and I'm a CPA and here to tell you about some very interesting new regulations that the IRS has just come out with about rental houses. We all have repairs on rental houses, but do we capitalize these repairs and depreciate them over several years, or do we get to write them off in the year that we spend the money? This has always been the big question, and the IRS regulations tries to answer this question. This temporary regulation, they call it temporary, but it's effective. It begins last year, January 1st, 2012. And it also affects prior years, and I'll tell you why. Because they have come up with a term, improvement. If an item that you are repairing is improved, then you need to capitalize it. But if it's just a run-of-the-mill repair, then you can expense it. For example, a roof that you only change out the black paper and the shingles for a repair, that's considered an expense in that year. If you change out some wood or some other structural things, then possibly the whole thing is a capital expenditure. You need to capitalize it and depreciate it over a certain period of time. In addition to 2012, we need to go back and analyze the last several years to see if there were any expensed item that should have been capitalized under the new rules. And I know what you're saying, wait a minute, those are done years. Not so, at least 3 years we're going to go back and look, because if they should have been capitalized under the new rules, we need to go ahead and capitalize them and make an adjustment in this year to bring some of that income. It will be income if we get rid of depreciation, right? Some of that income into this year, and for the next several years we can spread it out over 4 years. So these are some of the new rules, and so this is an area that you need to look at very closely with your tax professional.